Hello guys and welcome to my channel. If today is the first time coming across my channel, kindly do me the favor to hit the subscribe button, put on notification bell so that anytime I post an amazing content, you will be like first one to be notified. Today I'm making this video based on request. I've been having several requests from most of my YouTubers asking how to trade the synthetic indices, especially those who have a little capital. Now I'm going to make a quick video for you, just applying a simple strategy. Either you are using your mobile phone, either you are using a laptop. When you apply this strategy, you'll be able to make profit on the synthetic market, most especially on the boom and crash. But before I take you to my screen, that means my laptop screen, to explain the simple method you can use. Probably this is your first time joining my channel, or probably watching my video for the first time. If you're interested in mentorship on how to trade the forex market synthetic indices to make profit consistently, don't hesitate to hit the subscribe button, put on the notification bell, and then you get some free videos on my channel. But for the mentorship class, check the description below. You see my WhatsApp number there, right? Check the description below. You see my WhatsApp number. With that WhatsApp number, you can chat me up. Then I'll tell you what you need to join the mentorship class and the cost. Exactly. Probably you want to make profit every single day, either on the synthetic market or the forex market. So here is it. These are just today's earning. Can you see these are today's results? So just check the description below. You get my WhatsApp number there. Then we'll be able to communicate on how to join this mentorship class. Exactly. But probably you want to scout the market and make little profit. There are many videos on my channel whereby you can use those videos to make profit either on the forex market or on the synthetic market by scalping the market. But for something more profitable, then don't hesitate to check the description below. Exactly, guys. Alright, that being said, let's get into the activity now. Alright, guys, welcome to my channel. If today is your first time, please hit the subscribe button. Now, like I said, that this video is based on demand. For those of you who are asking a simple approach to trade the synthetic indices, most especially the boom and crash, PS. Now I'm going to give you a simple strategy you can use to trade the boom and crash pair, and this strategy is using the support and resistance to catch spike. Using the support and resistance to catch spike. Now, majority of you who are new into this market, you like trading the tick. That means you like trading all these little tick. And anytime you're trading this tick, then funny enough, price you encounter a huge spike like something like this, you immediately put you in a huge loss. Now imagine you holding a trade for complete 15 to 20 minutes, and then just one little spike, 1 minute spike, crashed all your efforts. You know, it can be very painful, right? And when you don't understand what is going to happen next, maybe in the case of trying to hold it, believing that price is going to come back to your area of interest, price now start dropping. Eventually, before you know it, you end up losing. So for you not to encounter such losses, it is ideal to understand how to trade all these kind of moves. To understand how to trade all these kind of long moves or long spike, that means on the crash index, right? How to have catch moves like this that's going to put you on a good profit in a very short period of time. So the first approach to it is using the support and resistance method, right? Which I'm going to explain to you either on the boom indices or on the crash indices. Now, how does this support and resistance method work? For you to identify a good support and resistance area in the market that's going to be of high probability of winning, that's going to be high probability, that's going to give you high probability of winning that trade, best thing is to come to the 4-hour time frame. Now, when you come to the 4-hour time frame, you change this candle to chart. Exactly. When you change it to chart, it looks like this. Now, with the help of this chart, you can easily mark out a good resistance area and a good support area. Now, this is a support zone. Why did we call that area as a support zone? Immediately price got there when price was around this axis, price find it a bit difficult to what? Go down, right? So you place your horizontal line at that point. You are connecting areas together. So immediately price break this area now from here. We'll still come to the current chart. Since price was able to break that area, then definitely it now becomes a flip zone. A flip zone is when your support become your resistance and when your resistance become your support. So in this case, initially this area was the support. Now, when price come back to that area, definitely it's going to be acting as what? Resistance. Exactly. So now when we highlight that zone, we discover that we have another one here. We have another good area of resistance, which I'm going to put here, this current place. This is another area of what? Resistance. We notice that price move up, it was unable to go up, rather price break through all the way down, right? Then we can still come down as far, though these ones are past now. This was another good area of resistance. Price came there, it couldn't go through, it couldn't penetrate all the way up, rather it moved all the way down. You can see the number of time price came there, 1, 2, almost 3 times. Price bounced back from that zone. So there is always a high probability that when price come to that zone next time, it's going to also react. So these are areas of how these are to mark your support and resistance using the trend line. But don't mind you that areas of support and resistance are not just a single line, they are zones in the market. Exactly. They are zones in the market. So don't go and mark it just using don't feel that only a single trend line gives you an area of support and resistance. They are zones. So now you can see that currently price is at an area of resistance. Let's say you've noticed this, you've understand how to use this pattern before now. Immediately price was coming up, you will have put either your sell limit at this zone, right? Then your stop loss few pips around here. That when price come there, you want to see what? A spike towards the downside. Exactly. You just want price to react there for you to be profitable. So once you are able to mark it like this, the next thing you do is you change it from your trend chart to your candle chart. Now when you change it to candle chart, you will notice that immediately price go to that same zone before. What happened? Price reacted. Right? Price did what? Price reacted. So there's high probability that price is going to react much at this zone. So this area, most especially on the 4-hour time frame, usually have high probability for catching spike. When I say catching spike, I'm talking about catching deep moves like what we saw in the 1 minute time frame earlier on. Right? This move we saw here. This move we saw here. These are areas where price reacted. So this is areas you should always put your entry for catching spike. Now I'm telling you this because it is more easier to catch those moves using your higher time frame areas of support and resistance rather coming to 1 minute to do that. No. When you use your areas of like support and resistance in your higher time frame like 4 hour and then 1 hour, the probability is usually high that price is going to what? Respond. You see now we are not using indicator. We are just trading a simple price action, right? The same thing applies to both boom indices. On boom indices, we are looking for areas of support. Now, this is a good area of support. Now, immediately price got to this zone and it went up. When you notice it coming down, you can put your what is it called? Your buy here. But in this case, if you want to trade it, let's look at what happened previously. You can see that price got to this zone at one particular time, right? Price was unable to what? Go up immediately. It came back before it finally break through. So there's always tendency that when price come back to that zone, price is definitely still going to give us such move. So that is what we have here right now. Areas of support and resistance. Areas of support and resistance where price reacted from. And this one, you are not just using a single touch. When you have multiple touch, it is usually it increases the probability, right? It increases the probability that price is definitely going to do what? Going to react at those zones. Can you see? A year later acted as support, price broke above. Immediately price breakthrough, price got to for price to go above that zone, right? It was a bit difficult. So but what you are focusing on is what catching spike with it. And the best thing is to look for where we have multiple touch, not just a single touch in your file. And if we should change this to candlestick now, you see the reasons why price was doing all that pullback from that area, right? You can see here. Now, this is just a simple approach. If you want to have deep knowledge on which other approach to use, then don't hesitate to join the mentorship class using the WhatsApp number in the description below. Just try out the strategy I teach you now. You can use your 1 hour time frame if your 4 hour time frame is too long. Just look for areas in your 1 hour time frame. Mark it out the way I explained. Wait for price to get to those zones and see what is going to happen. There's usually high probability. Now, when we want to talk about other, there's another approach you can use again, which is called the order block, breaker block. So all this, I have made a video on it. There's also softwares on it that's going to let you understand how to trade these synthetic indices the right way without doing guesswork. Is that clear, guys? So check the description below to join the mentorship class and get all these tools and information for you to be profitable in this market. Then coming to the what is it called? The crash. I'm sorry, it's VIX 75. We can also see that price is giving us some kind of move. Now, when you understand market structure, you know that automatically we are expecting price to drop. Why did I say we are expecting price to drop? At some point, this was the last point that gave us the high of the market. What happened? Price came and break through. Not only just breaking there, it also break through the extreme zone, right? So and it came back into that push or that move that led to that break of structure. So there is possibility that we are going to have what price drop all the way from here. And if you want to understand how to use this, you modify it by going to your what 15 minutes time frame. By going down to your 15-minute time frame to what to modify the other block that we have right here. So if you're finding it a bit complex, don't worry. When you join the class, all the information needed is there. So what we need in this 15-minute time frame now, we need price to create a bearish order block, right? Either break here, come back to mitigate, then want to see price go down. So that is what is happening there. Why some people will just take their entry directly from that H4. There is a lot of information that is going to make you understand how to trade with this synthetic market, even on forex market also, using any approach. But don't forget, go and try out this boom and this support and resistance method I just explained to you now. When you open it to your 4 hour time frame, you change your chart after to see those areas where price has reacted on. Then when you are able to identify it, These are areas of your interest because those areas has high probability of price reacting when price get there next time, right? They have high probability. Except probably you are maybe greedy, that's why you encounter loss, but the losses will be very, very minimal. And please, if you have a very little account, don't go to boom. Boom is very volatile. If you are holding buy, if you are expecting buy and price doesn't come immediately, or the price doesn't come immediately, it's going to take much from your account before definitely. But if you practice and you understand it and you master it very well, if it spike, the profit is also going to be very massive. So you can use the crash indices to practice it. Crash 1000 is not that volatile. Crash 500 is not that volatile. Is that clear, guys? So thanks for watching. Make sure you subscribe if you are new, and don't hesitate to put your notification bell so that anytime I post content like this, you're also going to be among those who are going to be notified. Please keep sharing this video. Is that clear? And then when you want to join the mentorship class, check the description below for my WhatsApp number. Don't worry, I'll be posting more videos on strategies that's going to enable you to make profit either on the synthetic market or on the forex market. Thanks for watching. See you in the next one.